Good morning everyone, my name is Manjit Singh and welcome to my YouTube channel. I am certified QuickBooks Pro Advisor accountant and today's video we will discuss about the basics of account. If we have the strong grasp of the basics, we can overcome from any difficult situation that we might face in the accounting journey. Let's get into the learning session. I made a PPT for you people so that you can understand it more easily and effectively. These are the today's topic that we will discuss. What is double entry system and how it works? How many type of accounts using example, and also we will discuss their respective rules and type of the reports that business usually use at the year end, and the component of the reports means what kind of data and what kind of information they show. And finally we will discuss about the workflow, about how data flow between these reports using an example. Let's discuss our first topic, which is double entry system and how it really works, or how it show or represent the data. When a single business transaction affect at least two accounts, debit and at the same time credit. Let's understand from an example that I bought a car for $25,000. Car is inflow from me since I purchased from a vendor, and outflow for me is a cash which is $25,000. How I categorized car as a debit transaction and bank is credit? We need to understand the type of accounts and their category and their rules, right? Let's get into the type of accounts. Basically, there are three type of accounts: personal account, real account, and nominal account. What is personal account? As its name suggests, account of persons. That may be a natural person, artificial person, or representative personal account. Natural person like me, you, or any your family member, right? And the artificial person is a person who got into the existence as per the law of any country, right? And the third one is representative account. That account means account belong to the group or a category rather than a individual person. For example, an outstanding salary of 10%. Rather than creating 10 accounts of each person, we group into the single account which we call the representative personal account. And the rule of personal account is debit the receiver and credit the giver. And the next account is a real account. A real account is an account of assets and properties from which we expect future benefits, as you can see here. For example, land, building, machinery, office equipment, tools, spare parts, goodwill, trademark, software, copyright, or any kind of property. And these assets are categorized under two types. First one is tangible, second one is intangible, right? Tangible are those that we can see, touch, and feel them. Example, land, building, machinery, office equipment, or any visible property. But if such property or an asset that are not used in business will not going to be categorized as an asset for such business, okay? And intangible one are those that goodwill, trademark, software, copyright, that they actually exist but we can't see them or feel them. They are actually in books and visible as an entry. And the rule of real account is debit but comes in and credit but goes out. Let's go back to the first example that we discussed, that I bought a car for $25,000. We debited the car and credited the outflow. Since both are real account, by real account, car is a property and cash or bank also come under a real account, right? Debit what comes in. Car comes in means car is inflow, it comes into the business. For example, I means a company, right? Car is inflow which is come into our business is a debt. That why we debited the car. And counterpart is 25,000 that goes to the vendor, goes out of the business. That why we credit that account, right? Now let's back to the third account, which is nominal account. What is nominal account? It's a simple account that means all expense and income cover under the nominal account. And the rule of nominal account is debit all expense, credit all income. Uh, Earlier we discussed about the representative personal account. It's linked to the nominal account. How? In example, I took example of outstanding salary, right? Salary is an expense which comes under the nominal account. We added outstanding prefix, right? Outstanding salary, which group into the single account. It convert into the representative personal account. As you can see here, if there is a prefix and suffix with a nominal account, it will become a representative personal account. Right? We discussed all three accounts: personal account, real account, and nominal account. Let's get into the next part of this video. Now let's just discuss about the components of financial statement that cover under standard reports. There are 5 components: income, expense, assets, equity, and liability. Income and expense are covered under profit and loss account. Asset, equity, and liability are covered under balance sheet. Right? Profit and loss account shows nominal account, and the rule of nominal account is income credit side and expense on the debit side. Right? And the balance sheet covers real account, personal account. It may be natural, artificial, or a representative personal account, right? And the rule of real account is debit what comes in, credit what goes out. Okay. And personal account is debit the receiver, credit the giver. Okay. Now let's move on to the case study that I prepared for you, so that you can understand thoroughly the workflow of a transaction. A sole proprietor of Sam and Company, who is a service provider, bought a car for his company for $86,000, right? And as you can see here, a transaction between Sam Company and Tesla Company. Tesla Company will be a vendor company since we are going to pay them. Transaction for car will be the asset which is going to be the part of balance sheet under tangible assets, right? And transaction with online transfer from Bank of America under cash and bank account, that will also cover under current assets, right? And the journal entry for this transaction will be the car account or a vehicle account debit and Bank of America credit. Why bank credit? Since it's an outflow, it's going out of a company, and the rule of real account is debit what comes in, credit what goes out, right? And please note that a test has, as you can see here, a particular of Tesla company and a ledger name is the same. Why? Because when we going to create a ledger of a person account, it may be a natural or a artificial. Their ledger name always as per their legal name. Since the legal name of Tesla company is a Tesla company, of course that is as per law, and obviously we are going to create a same name, right? And let us learn through the QuickBook. Let's create a transaction from our case study, that is between Sam and Tesla company for a Tesla car, right? New expense only book when we pay all the money upfront and nothing pending to pay. Bill raise only when we are promised to pay the vendor on a later date, right? Let's book an expense. Who did you pay? Tesla company from Bank of America. There you can say like 20 to this date. Payment cash. Okay, category. I already created a ledger of Tesla Model S under fixed asset. Okay. Description like car for company use. Amount $86,000. Okay. Save and close. Let's see the changes in our balance sheet. Since this transaction only affect balance sheet, there will be no change in profit and loss account. Let me run report again. As you can, there will be a change in report. It will take a little. Okay. As you can see here, this report does not contain any data since earlier transaction data related to the profit and loss account, right? Now look at the balance sheet. Earlier balance, starting balance was $1 lakh from Bank of America. Okay, there is no change in equity, but since we paid $86,000 from Bank of America to the Tesla company for model Tesla as the fixed asset, and here you can see this transaction created successfully. Let's create a new transaction. In this transaction we will raise a bill that will help you to understand the linkage of transaction between profit and loss account as well as balance sheet, right? Let's create a bill. Under new, a bill. Vendor, I already created a vendor, a random vendor A, a date, bill number say like 1011, category product 1, cost of goods sold, right? Amounting $1,000. Save and schedule payment. Okay. Let's refresh our reports. Let's change the period, May to June. Okay, run report. As you can see here, a product 1 shows under cost of goods sold. Since it's an expense and there is no credit side or income, it shows net income as a loss of 1000. How 1000 will affect the balance sheet? Here you can see that 86,000 model Tesla S and $14,000 bank, there is no change. Since we are paying someone and paying category cover under liability side, Here you can see that, right? And account payable, let's open a 1000. Account payable generated for vendor A, okay, for 1000, and 1000 also a loss for us since we paid but there is no income, and that net it adjusted from retained earning under equity, and the total remains same, $1 lakh, $1 lakh. This is it. This transaction affecting three sides of financial statement. First one is profit and loss account. Here is a loss, and second one is account payable, since we are going to pay $1000 to vendor A in near future, and that loss is adjusted from a retained earning, that may be the accumulated profit from past years, or maybe a new addition to equity, right? And our net generated retained earning will be $99,000. That's it for today's, guys. If you like this video, please leave a comment. This is my first video. I hope I able to make you people understand what I'm trying to teach you, and I hope you people learn today a new thing. And please leave a comment if I made any mistake, so I can solve this mistake in next video. Thank you. Like, subscribe and leave a comment, and thank you for your precious time.